Hi everyone, Kimberly Creel here from Creel & Creel Accountancy Corporation, here to talk about the Paycheck Protection Program loan forgiveness application. This is going to be based on guidance issued by the SBA and Treasury on Friday, May 15th. I've gone through and created an Excel workbook that I hope will be helpful for you when you're trying to arrive at your loan forgiveness calculation so that you don't have to laboriously go through every bit of these 11 pages, and I just really hope that this will be helpful for all of you. Now, this is new information really from the video that I posted a couple of weeks ago, so please go off of this one for now, and unless there is more guidance released in the coming weeks. I wanted to just go through these calculations, go through a few examples, and offer you all the details that you'll need that might be a little bit hard to follow from these 11 pages. The SBA guidance is not very user-friendly or simple in nature, so I wanted to just break this down and give you some of those details in a simplified form. Now, in order to complete this Excel workbook, you're going to need Q1 of 2020 payroll reports by employee, including pay rates. You're going to need a report for your covered period or the 8-week period for your PPP loan, and you're going to need total of all of your non-payroll costs. That would include your mortgage interest payments, your rent payments, your utility payments. Now, I want to make it clear that the SBA has specified that mortgage and rent payments for your business, those also include what's called personal property. That would be copiers, any automobile that might be leased in your business, the lease payments or the mortgage interest payments if you have a loan on that car, all of that is included in what's called these non-payroll costs, as long as they don't exceed 25% of your total loan amount. The SBA has clarified that these costs actually don't necessarily have to be paid during that 56 days. They can also be counted if they're incurred, as long as those incurred costs are paid on your next billing date for that bill. Here's an example. My covered period began on May 1st, so it will end on June 25th. I paid my May office rent on April 28th, but because the whole month of May is included in my covered period, my May rent is incurred, even though I paid it a little bit early, so that counts. Now I paid my June rent on May 30th, and that's paid during my covered period, so that counts. Now, when it comes to July rent, though, the way I'm understanding this is that when I prepay my July rent before June 25th, it can be included here, even though the invoice for my July rent might be dated July 1st. One caveat is that if you have a business mortgage payment, whether that be on an office building or an equipment loan, you can't prepay any mortgage payments. That is very specific in the guidance, but they don't specifically say anything about prepaying rent or utilities. The SBA also clarified the specific documentation you'll need to submit to your lender. Now that includes bank statements or third-party payroll service reports that support how much you paid to your employees during your covered period, like we talked about before. They will also be requiring quarterly payroll tax returns. So you'll need to submit your first quarter of 2020 payroll return, as well as your second quarter payroll return, in order to support the figures that you're presenting to them, because your 8-week period likely falls within the second quarter. You'll also need to provide your bank with quarterly tax returns or a third-party payroll report that covers any small amount of a pay period that's just before or just after your 8-week PPP period, if your 8 weeks do not perfectly align with payroll periods, which they likely don't. So you'll also need to support with receipts, canceled checks, or account statements any documentation supporting your employer contributions to employee health insurance and retirement contributions. Now, related to non-payroll costs, they also specify that you'll have to include February statements for any mortgage or lease or rent that would support to the bank that those agreements were in place as of February 15th, 2020, which has really always been a requirement, but now they're indicating that you'll have to provide an account statement. Even if that payment was made before your 8-week period of time, you'll still need that account statement to support the fact that that agreement was in place as of February 15th of this year.
Let's start by determining your covered period. If your business runs payroll on a semi-monthly or monthly schedule, your covered period begins on the day you received your loan. If you run your payroll weekly or bi-weekly, you can align your covered period with the first day of the payroll cycle following your loan disbursement. Tab G contains charts that can help you determine your covered period. Here's an example. ABC Company received their PPP loan proceeds on April 23rd. It processes payroll biweekly, so its next payroll processing won't be paid until April 30th. Instead of potentially losing out on 7 days, ABC Company can make the first day of its covered period April 26th, which is the first day of its next payroll run. This way, ABC can run payroll reports for April 26th through June 20th to simplify these calculations. Even though the payroll for the period ending June 20th won't be paid during the covered period, it still counts toward loan forgiveness because the payroll is incurred, or in other words, earned, during the covered period. Let's use April 26th through June 20th as our covered period for the purposes of this example.
Here I'm going to briefly go through the worksheets and kind of how they flow together, and then I'll go through some examples right after. So don't skip forward too quickly because you might miss how these will all work.
If your employees' hours and pay levels were the same during your covered period as they were at February 15th, you can skip straight to tab D, which is the PPP Schedule A worksheet. Here you will manually record your employee data in the yellow fields, including names, social security numbers, compensation for the covered period, and the full-time equivalent calculation for each employee. Those totals will then flow to tab C. Here, the figures you will need are employer contributions to employees' health insurance, employer contributions to a company-sponsored retirement plan, and any employer state taxes on employee payroll paid during the covered period. Note that you don't have to worry about reducing the amount that you contributed to an employee's benefits if they earn greater than $100,000 annualized. That limit really only applies to gross pay. Record any owner compensation here as well. Down below, under the full-time equivalent reduction calculation, you can either record a 1 on line 11 or manually enter a 1 on line 13. Keep in mind that this is only for employers who did not reduce employee pay rates or salary levels. You will finish with tab B, the loan forgiveness calculation. Above is where you will indicate expenditures on non-payroll costs that we discussed earlier. Once you enter your PPP loan amount on line 9, you will see that the smallest of lines 8, 9, and 10 is the amount of your loan to be forgiven. Let's go through a quick example for a small business with one employee and owner compensation that is capped at $15,385. We will record the sole employee besides the owner and her pay of $7,500 during the covered period. This information will flow to tab C. Here we will record the employer's contributions toward Jane's health insurance and 401k and employer state taxes paid. We will also include the single owner's $15,385 maximum compensation. Don't forget to record a 1 in the full-time equivalent reduction calculation. We now finish off with tab B. This employer received a $30,833 PPP loan based on 2019 payroll costs, so we will record that on line 9. The employer paid $6,500 in office rent during the covered period and paid $750 for the office phone and internet. Because more than 75% of the loan amount was spent on payroll costs, we see that the entire $30,710 is to be forgiven. For employers who reduced employee salaries or pay rates or cut hours during the covered period, let's start by testing the hourly workers whose pay was reduced. Bear in mind that this test is only applicable to employees who earned up to $100,000 annualized at any point last year and whose pay rates were reduced. We will record the employee names and ID numbers along with the average hourly wage they earned during the covered period. Next, to determine if their pay has been reduced by more than 25%, we need to record what their average wage was during the first quarter of 2020. If wages were reduced by more than 25%, you will need to test to see if you meet the safe harbor. If you do, there will be no reduction in loan forgiveness due to this employee's rates being reduced. If you do not, you'll need to calculate the reduction based on that employee's average hours worked during the first quarter of 2020. Let's go through an example. Here we have John, Sam, and Susie. John and Sam work 20 hours a week, and Susie works 30 hours per week during the covered period, and each earned $15 an hour during the covered period. During the first quarter of 2020, however, John earned $18 an hour, Sam earned $20 an hour, and Susie earned $24 an hour. As you can see here, John and Sam were both paid at least 75% of the same wage earned in quarter one, so there will be no wage reduction to factor into loan forgiveness for these two employees. For Susie, however, we see a 37% reduction in pay. Our next test is whether we meet the safe harbor for Susie. Here we need to record Susie's hourly wage as of February 15th and then her average wage from February 15th through April 26th. Down below in tab F, we have included a couple of charts to help determine the average rate for these periods required. Let's record Susie's wage rates for these periods to determine her average pay rate for February 15th through April 26th. Susie was paid $24 an hour as of February 15th, but her pay rate was reduced to $20 an hour on March 1st, and then down to $15 an hour on April 1st. Her average rate for that period now comes to $18.80 per hour, and during the covered period, her average rate was $15 an hour. Back up above, let's record Susie's average rates in step 2. Because she was paid less on average between February 15th and April 26th than she was before that, we have to complete step 2C to see if we meet the safe harbor. In this case, Susie's hourly rate is increased to $20 an hour as of June 30th, but because it is not increased back to her pre-February 15th rate, we do not meet the safe harbor, and Susie's wage reduction will affect ABC Company's loan forgiveness. Our last step here is to record her average hours worked during the first quarter of 2020. She has always worked 30 hours per week, so based on that, the amount that will reduce loan forgiveness will be $720 for this 8-week period. This is calculated by taking the hourly rate reduction over 75%, which is $3 per hour, and multiplying that by 30 average hours per week for 8 weeks. If you have more than 5 employees whose rates were reduced during your covered period, you can keep a record of the results of these entries and replicate them with your additional employees. If you would like a version of this workbook that includes additional employees, please reach out to me and I can revise the workbook to accommodate your company's size. Now let's go through what this looks like for salaried employees. The same $100,000 annualized rule applies here. In the bottom part of tab E, we have included simple calculators to help determine annual salary levels based on an employee's payroll during your covered period depending on pay frequency. These numbers will flow to other parts of these forms. Here's an example. Bill is salaried and earned $7,500 during the covered period. He's paid on a biweekly basis and there were 4 pay periods during the covered period, so his salary of $48,750 flows up to step 1. During the first quarter 2020, he grossed $18,000. Bill wasn't paid at least 75% of what he earned earlier in the year, so we have to go to step 2. His salary as of February 15th was $72,000, and on average between February 15th and April 26th was $62,700. For step 2C, we need to record whether Bill's salary is increased back up to $72,000 annually or not. His salary is increased back to that level, so we meet the safe harbor and Bill's reduced salary during the covered period does not affect ABC's loan forgiveness. As you will see when you move over to tab D, the names, social security numbers, salaries paid, and any wage or salary reduction from tabs E or F automatically populate these fields. In box 1 for your hourly workers, record their actual pay during your covered period. In box 2 for both hourly and salaried workers, indicate what each employee's full-time equivalent calculation is. This is based on a 40-hour work week where you divide an employee's average hours worked by 40. So someone working 40 hours or more on average is 1 full-time equivalent, while someone working 30 hours on average is 0.75, and so on. You will then need to complete this worksheet by filling out any remaining yellow fields that apply in your case. Here we also have Jim, whose salary was not reduced at any point in 2020. We will record his data manually. An additional step here relates to the full-time equivalent reduction exceptions. If you laid off any employees between February 15th and April 26th, and since offered to rehire them at their same pay levels, but they refused, that reduction in your full-time equivalent count will not affect your loan forgiveness. The same applies if you terminated an employee for good cause, or if the employee voluntarily resigned or was granted a reduction of hours by their choice. If you did not replace these employees during your covered period, therefore there are not new employees listed in this chart, then record a 1 for each full-time equivalent employee exception in this green box. What this does is it increases what the SBA will consider as your full-time equivalent count for your covered period when compared to the past. Continuing with our example, we also have Mary, who was paid $125,000 in 2019 and did not see a pay reduction this year. Note that the maximum 8-week compensation level we can record for Mary is $15,385, even though she was paid more than that. Our final step is down below, where we will see if ABC Company meets the full-time equivalent safe harbor. If you have not reduced your full-time equivalent count since February 15th, then don't worry about completing these fields. If you have, you must determine your average full-time equivalent count between February 15th and April 26th and compare that to your full-time equivalent count from the pay period that included February 15th. In this example, the company had 5.1 full-time equivalents between February 15th and April 26th, and 5.3 as of February 15th. If you had more full-time equivalents prior to February 15th, in order to now meet the safe harbor, you must restore that level before June 30th. In this case, because the company reduced Sam's hours from 40 hours per week to 20 hours, the full-time equivalent count here is 4.75 as of June 30th, and the safe harbor is not met. If your company had less full-time equivalents after February 15th than before, the safe harbor does not apply, and you will need to calculate your full-time equivalency reduction over on tab C, lines 11 through 13. We'll get to that in just a minute. Now that our Schedule A worksheet is complete, let's make our way to Schedule A. Here, the figures you will need to determine are employer contributions to employees' health insurance, employer contributions to a company-sponsored retirement plan, and any employer state taxes on employee payroll paid during the covered period. Note that you don't have to worry about reducing the amount that you contributed to an employee's benefits if they earn greater than $100,000 annualized. That limit really only applies to gross pay. Record any owner compensation here as well. Down below, we see the full-time equivalency reduction calculation. Here's where you will have to elect a chosen reference period. You will need to determine during which of these periods your full-time equivalent count was lowest so that your full-time equivalent reduction quotient is as high as possible. For this example, let's say that ABC Company had 5.25 full-time equivalents in January and February of 2020. During the covered period, they were 4.75, so their quotient is 0.9. This will factor into the loan forgiveness calculation on tab B. We're finally at tab B. Payroll costs, the wage or salary reduction calculation, and full-time equivalent reduction quotient all flow over to this final schedule. Here is where you will record your non-payroll costs and your PPP loan amount. The lowest of lines 8, 9, or 10 will be the forgiveness amount based on current guidance. In this example, ABC Company spent $66,780 of its PPP loan proceeds, but by not meeting the safe harbor for Susie's hourly payroll and by reducing its full-time equivalents, its loan forgiveness is reduced to $59,769. The remaining several thousand dollars will be repayable to the lender at an interest rate of 1% over the next 2 years. I truly hope that this video has been helpful for you. Please reach out to me if you have any trouble with this workbook. If in the coming weeks any additional legislation is passed that affects these calculations, I will update the worksheets and will publish a new version for our clients. Thank you.